Okay. Good morning, Professor Brunelli. We are the True Balance Group. I'm Luca Tannia. The firm we chosen is the Iris Energy Limited, and now we will start introducing to the market components and the firm itself.
So hello everyone, it is Orhan, and now I'm going to introduce. Iris Energy Limited is a sustainable Bitcoin mining company that operates using high-efficiency data centers powered by renewable energy. Key elements of the business model are infrastructure ownership and scalability. Iris owns its data centers, reducing third-party costs. This allows for scalable expansion. The company can decide where to operate, setting up in low-cost regions where they can use renewable energy to reduce costs. So, the revenue generation of the firm, the first and the important one is Bitcoin mining, and the rest is cloud-based AI services and equipment sales. So there is 4 key locations. The first 3 is in British Columbia, Canada, and you can see the details in the slides. And the last one is in the Texas, USA. So my colleague will introduce the strengths and the risks of the firm.
So before addressing in reality what the financial reports of the company, we have to talk about the strengths, the risks, and the competitors of the Iren Energy Limited. Their strengths are that they use 100% renewable energy. That means that they have lower costs and can also get incentives from and benefits from the governments. They use also a low debt strategies and strategy, as it means that they have less financial risks than other companies, also because they rely also a lot on their renewable energy and on their revenues. There is no reliance on third parties data centers, and as they have their own, and they also try and will expand to the artificial intelligence cloud services to get a potential expansion and future revenue diversifications. Then there are the risks. The risks are, of course, the Bitcoin price volatility, and because the revenue depends heavily on Bitcoin price. And as we saw in the last few months, there are a lot of fluctuations that can impact the company if they hold Bitcoin. And then there is also the increase in mining difficulty. As we saw in April 24, there was the halving, so reduction of Bitcoin possibility, Bitcoin number of Bitcoin, the number of Bitcoin to be mined, and it means that the future profitability is challenged, and if the Iren won't adapt to the new mining possibilities, they will have a lot of difficulties. And the last risk is that the AI revenues are still too small and they need more expansion. And it means that the Iren needs to invest a lot in the artificial intelligence environment. For last, we have to talk about the competitors. Iren competes with a lot of Bitcoin mining, such as Marathon Digital Holdings and Riot. However, Iren relies only on their renewable energy and keeps their operational costs really low, and they will expand into high potential regions, and it means that the company has a competitive advantage on the others. Now Anna will explain our financial reports, and the word to you, Anna.
Okay, so let's move to main financial figures. Before we finalized the company's financial statements, we prepared an adjusted trial balance, the list of all accounts and their balances, and after that we identified and made the necessary adjustments such as accrued expenses, revenue recognition, depreciation, and prepared an adjusted trial balance. Please, next. As of June 30th, 2025, our total assets amount to 5,790,000, and compared to previous period, our total assets have increased by 500%. Our total liabilities currently stand at 3,079,000, which represents a rise from the previous period, mostly due to a rise in deferred revenue. Our total equity amounts to 2,700,000, reflecting a growth of almost 300%. And now let's talk about income statement. For the period ending 30th of June 2025, we recorded total revenue of 3,400,000. Our total expenses for this period amounted 664,000. This results in 2,700,000 net income, and our net income after taxes for the period stands at 1,900,000. At the end of an accounting period, we prepared closing entries to transfer temporary account balances, such as revenue, expenses, and expenses into retained earnings account, preparing our accounts for the next period.
Now let's talk about revenues and costs. We will start with revenues. In this slide, we can see that the main source of revenues is Bitcoin mining, followed by AI cloud service and equipment sales and other revenues. Compared to the previous period, we can see a great expansion in the AI cloud service. Now we see more in depth. Bitcoin mining represented 81% of the total revenue. As we can see in the ledger, we have the first transaction in the 22nd of December, where they earned $7,800, and then in the 5th of June, $2 million. The strategy that Ariane uses is they set to sell Bitcoin rather than holding it, and now we see why. The first reason is because they want to cover their operating expenses. In fact, selling Bitcoin rather than holding it provides more cash, which can be used to maintain, to fund energy, and to expand the data center in more location. Then, as Simone said before, Bitcoin is a really volatile asset, meaning that selling Bitcoin will reduce the financial risk. In addition, they can focus on expansion using the cash that they earned by the Bitcoin sold. Then there is AI cloud computing, which represents around 20% of the total revenues. As we can see in the ledger, on the 30th of June, they earned $500,000, and then in the adjustment, they earned another 1,000 in revenues, meaning that they earned before, and then they capitalized the earnings only then, and that's why we placed it in the adjustments. Now we show you some transaction which emphasize this shift of revenue from the Bitcoin mining from the AI cloud. For example, in the 1st of July, they purchased the AI servers for cash, and then they continue investing, purchasing more GPUs on the 7th of September for the machine learning research and development. In the following period, they continue to invest heavily in the AI expansion in order to diversify their revenues, not only relying on Bitcoin mining.
And for the last types of revenues are the ones related to the equipment sales and other revenues, as I said before, about the incentives of the government. As we can see here, they get $15,000 that come from the incentives of the government, and they of course are really little, a small part of the company, so less than 1%, and the revenues comes from, of course, occasionally selling surplus mining revenues and from hosting or selling computational powers. Now Anna will explain you the income costs of the Eden.
Main costs of our company comes from operational and administrative costs that are lower than competitors due to focus on automation and efficiency. Also electricity and energy costs, which are lower than fossil fuel reliant competitors because of hydroelectric power. And the two main cost drivers are depreciation and equipment cost and employees' benefits that we'll look in details. Okay, so depreciation comprises 285,000, which is 42% of all costs. It mainly comes from mining hardware, as it has a short lifespan from 2 to 4 years and depreciates quickly. And now employees' benefits, they stand for 160,000, which is 24% of all costs.
Okay, let's talk about the future strategies. Like there is 4. Strengthen AI cloud computing businesses, increase mining efficiency, explore new renewable sources, and strategic partnership with AI firms. Okay, how Iron can become stronger? For the short-term improvements, expand AI and HPC services for new revenue streams. Upgrade mining hardware for better energy efficiency. Strengthen regulatory to engagement, mitigate legal risks. And also long-term strategy. Increase Bitcoin reserves post-halving for future price gains. Secure partnerships with institutional investors and AI firms. Position Iron as the greenest Bitcoin mining company, leveraging ESG trends to attract capital. By implementing these strategies, Iris Limited can strengthen its market position, reduce risks, and unlock new growth opportunities.
Thanks for listening. That's all for this presentation. We hope you liked it, and see you in class. Goodbye.